Hi, before I jump into the daily QQQ report, I just wanted to mention that this is the 1-year anniversary of offering both the daily QQQ report and the daily SPY report on wickedstocks.com as a daily part of a subscription package that includes 2 individual stock picks every week, the S&P 500 index, Nasdaq-100 index, and the long bond TLT ETF. And the daily QQQ and the daily SPY started on March 1st of 2022. This is the 1-year anniversary. We're feeling very good about this product. It continues to grow at a very nice pace. And because of our celebration, if you will, our 1-year anniversary today, we are presenting it for free just today on YouTube, and we're offering 15% off your first month subscription if you decide to sign up for wickedstocks.com. Just click on the link below, takes you to the wickedstocks.com payment gateway. There's a coupon code field. You'll enter WICKED 2023, all caps, WICKED 2023, and that'll give you 15% off your first month subscription to wickedstocks.com. So check us out, and without further ado, let's talk the Daily SPY report. Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily QQQ report for Wednesday, March 1st, 2023. Let's take a look at the charts. Start with the daily chart. Just a reminder that about 3 weeks ago, we tested long-term resistance at 309.69 and fell off to long-term support at 303.55. This convergent wedge really is part of a rising 1/3 speed line that we did then close below about a week and change ago, week and a half ago or so, setting off a longer-term sell signal. So holding below 303.55, we maintain a 3 to 5 week sell signal into the 270s. This is a good picture of what I just showed you, the 303.55. Now, we're not going to see that today. We probably won't see it. I don't think we'll see it this week. In fact, I'll get to that in just a moment in terms of 294.84 being our weekly resistance still. But this area in the 270s remains a 3 to 5 week target. As I mentioned about a week ago when we closed below the speed line, that you could look for 275 out of the money puts that don't expire for at least a month. I would go several months out to preserve delta on the way down, less susceptible to time decay element. Now, in terms of our resistance, today, it's 294.84, and it's a descending 1/3 speed line that has performed pretty well this week. Monday, Tuesday highs roughly 294.84, able to contain weekly buying pressures, and below which we remain on the defensive through the rest of the week and into next. This 284.13, 50% downside from the October low to the February high in reach by the end of next week or sooner. So in terms of the swing trade, 3 to 5 days, 1 to 2 weeks, it's being short below 294.84, anticipating 284.13. 2 to 3 week position traders may consider being short at 294.84 if given the chance, if we rally into that area today, because the mid 270s, the 275 area roughly in reach over the next few weeks below 294.84. So that is the downside. In terms of the day trade itself, we still have this 291.66 former channel bottom that, despite the fact that we've violated it, it still is worth recognizing as an intraday pivot point, above which 294.84 in reach. If we break or open today below 291.66, 286.87 is attainable intraday. 286.87 is nothing more than a 50% downside from the December low against the more recent February high. We can bottom out there for the day, but if we close today below 286.87, then expect tomorrow this 284.13, 50% fib off the October, February extremes, where we could quite easily bottom out through the rest of the week. Now, if we were to close below 284.13, we're just a few days away from reaching our objective in the 274.43 to 278.81 region. This is a zone of support that can contain selling through the second quarter, and from there we can turn back up again to 309.69. Once again, 309.69 is this longer-term channel top. So that pretty much covers the downside. Let's talk upside today. That if we happen to, push or open above that descending 1/3 speed line, I think this thing can run pretty aggressively. I was going to put in the 296, 297 area, but I think 299.20 is not out of the question. If we push or open today above 294.84, short cover rally to 299.20, that may be it for the day. But if we close today above 294.84 and you're short the market right now in a 3 to 5 day downside swing trade, my recommendation would be to at least liquidate that long position and consider reversing. Now, closing above 294.84 is an upside 3 to 5 day swing trade to 303.55, which is rising at a pretty progressive pace and will converge with that 309.69 long-term channel top over the next week or so of trade. So there is another way of interpreting this, that if we close above 294.84, we will push into this narrowing zone of significant overhead resistance between 303.55 and 309.69, which is where this sort of sell-off began. It is an area, especially 309.69, that can contain buying through March into April, and we can fall off again from here. And it would be a settlement above 309.69 that would, I would then advise, let's reach for 345 out of money calls that don't expire for at least 6 months, because we'd have a long-term buy signal on our hands that should then yield 335.90 within a month or two, and over the following 3 to 5 months, 350.46, which is a significant overhead resistance area for the Q. Big test in that market in the months ahead if it's inclined to reach it. And yes, it would be inclined to reach it if we close above 309.69. But I don't expect to see this upper area once again unless we settle today above 294.84. Until then, we remain heavy through the rest of the week and into later March. I'm going to leave it at that for today's Daily Triple Q report. I'll be back tomorrow, of course, with Thursdays. You have a great evening.